So today I want to look at the gold market again, and let's face it, most people are just trapped into making the wrong decisions at the wrong time. Invariably, they do it over and over again. Um, Many of the analysts that I see on the internet, certainly not the only ones that make this mistake, but one that consistently makes the mistake is Uh, the analysts on the KE report, they're always bearish at these bottoms, looking for um, further downside, and then they're always bullish at these tops, expecting the move to continue indefinitely. And like I said, they're not by any means the only one. Just one example that comes to mind. Most traders and most analysts are this way. Um, Folks, seriously, when a rally is 7 months into the rally, that's not the time to be looking for a sustained breakout. The intermediate cycle is already too mature. This is the time to uh, be thinking about deleveraging, maybe taking some profits. The time to be bullish is when things are oversold down here. When you see everybody, all the analysts are bearish. You're seeing lots of articles about how gold is dead and going below $1,000. This is when you want to be bullish. When everyone is writing bullish articles and looking for, finally looking for a breakout, um, this is when you want to be cautious and like I said, you want to start deleveraging. You want to um, you take some profits. Um, 7 months into a rally is not the time to be looking to add to or make your initial buy in the precious metals sector. You want to buy when you're scared. You want to sell when you're greedy. Right now, everyone is getting greedy. I, I'm not going to say that we've got a final intermediate top here, but it's possible. We've got a potential reversal candle, and you can see that sometimes these kind of things will signal an intermediate top. We're very overbought on the weekly charts. We've got what looks to be a cup, and potentially, there would be a handle on this cup breakout, but we're getting close to that resistance level that I'd mentioned before in the 1360 to, well, let's call it 1380 level. At the top this week, we were only $10 away from that 1360. So there's probably not a lot of upside. We're 27 weeks into this rally. Sustained breakouts will typically occur early in an intermediate rally. So, for this to produce a sustained breakout, we would probably need to break above this, let's say by week 5, not week 27. When you're 25 plus weeks into an intermediate rally, the odds of getting a sustained breakout at that point are pretty slim. Any breakout at this point is likely to be sold into by smart money, and basically they would dump their shares off to the dumb money retail traders, the gold bugs, emotional gold bugs. And I mentioned this in my last video too. This is how markets, especially the metals market, often tops. Is uh, the banks will manufacture a breakout, and then they'll dump their shares on the emotional gold bugs that aren't smart enough to realize that you don't buy a breakout that occurs 20 plus weeks into an intermediate rally. The odds of it being a sustained move are very slim. You want to buy a breakout that occurs early in an intermediate cycle, maybe uh, you know 5 or 6 weeks into an intermediate rally. Those kind of breakouts you do want to buy, because those have the potential for a sustained move. And I think that's what we're going to get during the next intermediate cycle, not this cycle. So the reality is, in hindsight, looking at a weekly chart, this seems like this was very easy to make money. But the reality is that this has been a very difficult intermediate cycle, and I'll show you why. I'll switch over to the daily chart of miners. All right, so here's the daily chart, and so first off, we get this low in the miners was a lower low, even though gold did not break below its August low here. The miners did, and I mentioned at the time that this is often how, again, this is kind of the opposite of how the banks will manufacture a breakout to sell into. Um, they'll manufacture a trap basically to sell at the very top. They'll manufacture a breakout. The dumb money emotional gold bugs will buy that breakout, thinking that they're going to get a sustained move, and then the banks will dump their shares on them at the top. The same thing occurs, only inversely at the bottoms. The banks will create a breakdown. The emotional gold bugs panic. They sell all of their shares at that point. They give up. They throw in the towel. The banks scoop up the shares cheap, and then we get a bottom. But the reality is that in real time, this whole rally from September to this may potentially turn out to be a top, and we may still have a little further to go. But anyway, the reality is this has been a very difficult um, 6 months to trade in real time. It's just been very volatile. You can see we get these quick sudden corrections. You don't get a lot of follow through on the breakouts. Here we get a breakout. It basically lasts 2 days, and then we get this long extended move down into the daily cycle low that demoralizes people, traders, and then we start a long slow slog back up, and again we get a breakout. The breakout's immediately followed by a bearish engulfing candle, and then a few more days, another attempt at a breakout and a reversal, and then once we do kind of finally start to confirm this breakout, then we get another move down into a daily cycle low. And as many of you may remember, I was warning people that this was possibly in play here, that you needed to at least be unleveraged right here, and that was a correct call. We got another multi-day pullback into a daily cycle low. Enough to scare traders out. At that point I did call this bottom. Got traders in again, suggested maybe deleveraging here as we formed this bull flag, and then caught the move out of this bull flag to this top. At this point, we're just so late in this intermediate cycle that you definitely don't want to be leveraged. We're starting to get some divergences forming here and here, so it's risky. We could be forming an intermediate top here. So the time to buy is not right here. Yes, we bought right here and we rode this up, but maybe you want to go ahead and take your profits, or at least take some profits here. And I'm going to tell you that if the miners move below this low right here, that's your signal to get out. An intermediate decline has probably begun. And at that point, you would want to just sit on the sidelines and wait until we get some oversold conditions on the weekly chart. So let me convert back to weekly. All right, so just the vast majority of people and analysts just do the exact opposite of what they should do. Most people, would like to be a contrarian, but in real time, it's very, very tough to do, because it's tough to time exact tops and bottoms. Usually, you end up being early to the trade, and then you have to, suffer while the market continues going up, or you suffer while the market continues going down, and even though you had the correct trade on. So I mean, one could have bought right here and been a contrarian, that you could have bought on the breakdown out of this consolidation box, and you would have had the right trade on, as we've clearly gone way above that, but it would be very painful because you'd still have about 5 weeks of having to endure uh, a premature entry. Um, so that's just what is tough about being a contrarian. It's not easy to time these turning points exactly, and if you don't, then it seems like that you've put on a bad trade, and in reality, you haven't really put on a bad trade. You're just early. You're just premature to the trade. um, but in real time, this has just been a very volatile move, very hard to trade. Lots of pullbacks, scary multi-week moves down. Um, and now we are overbought, and this is the point at which everybody is finally ready to become, um, ultra bullish and start buying what they think is going to be a sustained breakout. And it's just too late in the intermediate cycle to be doing that. You want to try and buy when price is oversold on the weekly charts, and you can see we're going to have a ways to go. It's going to take multiple weeks to uh, for the momentum oscillators to cycle back down to oversold. Right now we're massively overbought. Not a good time to be, um, definitely not a good time to be leveraged. And you want to tighten your stops up at this point. Like I said, any move below this level, that's a lower low, and that's your signal that you need to get out. So for decades, charts, they move up and they move down. The times to sell is when we're overbought. The time to buy is when we're oversold. Right now, we're extremely overbought. Probably not a good time to be buying. Now is a good time to be tightening up your stops. Once this cycles back down to oversold, and it will at some point cycle back down to oversold, that's going to be your buy signal, and that's how you make money in the markets. And again, let me stress that despite what you're going to hear on most of the analysts, that they just make the same mistake over and over, year after year after year. Um, Breakouts that occur, very late, 27 weeks into a rally. We've got a breakout right here, but it's just too late in the intermediate cycle to really have much chance of being sustained. So not a good spot to chase. The spot where you really want to back up the truck is when these weekly oscillators come back down here and get oversold. So uh, in hindsight, this looks like it would be really easy to make money on, but in reality, in real time, day-to-day trading, this was actually a very difficult intermediate cycle. But I think the next one is going to get much easier, because I think we will get a sustained breakout above uh, probably even this larger consolidation box. So let me widen this a bit. All right, so we've got a pretty well-defined consolidation box between 25 and about 21. We're back into the middle of that consolidation box. We may still have some upside here depending on how this week goes. We could get up here to 25 maybe, but at that point I would not be expecting a sustained breakout above this level. But during the next intermediate cycle, I do expect a sustained breakout. I think we would get back to this, uh, that level fairly quickly, early in the intermediate cycle, maybe by week 4 to 6. And then at that point, traders will still be nervous. They won't be overly bullish. They'll be worried about the market reversing and going back down like everyone is in the stock market still. And that's the fuel to get a sustained breakout. So I suspect the next intermediate cycle, once we get a pullback and then start the next intermediate cycle, I suspect that cycle is going to be much easier to trade in real time than this cycle was. This cycle is easy to trade in hindsight, looking backwards, but in real time, these volatile moves and corrections were very hard to um, hold through. It was just easy to get knocked out. Just a very, very difficult intermediate cycle. But I do believe the next intermediate cycle is going to be much easier to trade.